The moment you get married and have a child, the first thing you need to do in India for tax saving is start an HUF. Now in this video, I'll give you the entire screenshot of documents you need to sign to get it started, but understand how tax saving works. Now, the moment you get married, you get so many gifts from friends and family. And then when you have a child, your child gets so many gifts. Now, the biggest mistake most people make is they take those gifts and put it into the account of either themselves or the spouse. And further, when they invest that, all the interest or the income that you earn on that corpus is taxed as per your tax slabs. So if you're already in the 30% tax slab, you're actually paying 30% tax on those gifts, which ideally you should not be paying if you were to park that in an HUF. I'll give you an example. Imagine these gifts total up to say 20 lakh rupees. Now you invest it in some investment option and you get 2 lakh rupees annually. If it were invested in your name, you would pay upwards of 60,000 rupees tax on it. But if it goes into an HUF, there is no tax. Now, how do you create the HUF? You need to create a one-page HUF deed, which mentions that the male head of the family is the Karta, the wife is a co-partner, and now there is also a son or a daughter. Now, all these gifts combined are put in a separate PAN card and a separate bank account for the HUF. Now, if there is ancestral property that you receive, you can also put it as part of the HUF. You can also run a business as part of the HUF. So all the rent that the property earns or the profits that the business earn, well, it is subject to tax in a separate entity which has up to almost 5 lakhs of tax-free income purely because of its own tax slabs. I've given a lot about the process in the description. Share it with someone who may need it.